In business news, the International Monetary Fund says achieving Nigeria's projected 3.1% economic growth for 2024 is dependent on implementation of stronger reforms. IMF's resident representatives, Dr. Christian Ebeke, said this at the Lagos Chamber of Commerce and Industry's International Business Conference and Expo 2024, with the theme Invest Nigeria in Lagos. Speaking with the conference, President of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Idahosa, said the conference is pivotal to Nigeria's journey towards stabilizing the economy and driving sustainable economic growth, provide a unique opportunity to explore new avenues for investments, foster innovative partnership, and chart a new course towards a more prosperous future for Nigeria and the African continent.
When we look at Nigeria, we have to look at the history, at least over the past 10 years. Most of these red indicators are the result of inherited policies that exacerbated imbalances, right? So last year was a moment of clarity for policymakers, and they rightly took significant reforms in order to change the course, to change the path for the economy.
We'll continue to create and ensure that business-friendly environment in Lagos is not just a talk shop, it's something that will be intentional and will be deliberate about. We'll continue to keep our doors open to all interested investors and partners. We therefore invite you to take advantage of the opportunity that is bound in our country, that is bound in Lagos, and to create real partners that will build a prosperous future not only for Lagos, but for our country.
The federal and state governments have demonstrated and continue to demonstrate a strong commitment to making Nigeria a preferred destination for global investors through various policy reforms. We are actively engaging with the governments, the federal governments and the state governments, in implementing policies that promote ease of doing business, improve infrastructure, and enhance security.
The Assets Management Corporation of Nigeria, AMCON, has announced plans to engage international asset tracers to locate and recover assets hidden by uncooperative debtors offshore, including those masquerading under special purpose vehicles. This was disclosed by the Managing Director and Chief Executive Officer of the corporation, Mr. Gbenga Alade, during an interactive session with media executives in Lagos. We have more in this report.
The Assets Management Corporation of Nigeria is empowered by the AMCON Act to hold, manage, realize and dispose of eligible bank assets, including collection of interests, principal and capital, due and the taking over of collateral securing such assets in accordance with AMCON provisions. In recent times, the corporation has been grappling with the recovery of non-performing loans and debts amounting to about 5 trillion naira. It is in light of this that the Chief Executive Officer of AMCON says the corporation will be collaborating with international debt tracers to locate hidden assets.
Up to date, between January and now, the corporation has collected about 100 billion. I'm telling you, in 7 months or 7.5 months, honestly, if you know how difficult the loans that are remaining now, how difficult it is, you will say that, yes, this is a very good feat.
Mr. Alade added that AMCON, under his leadership, will focus on selected sectors of the economy that will help drive growth and development.
When we came in, the executive decided that we are going to focus primarily on 4 different sectors that we believe that resolution in those sectors, or resolution of obligors in those sectors that are very large, very big obligors there, will significantly impact the Nigerian, the Nigerian economy and even the common man on the street. And we decided that power is one of them, because we believe that power is an essential sector in the economy that if fully resolved, will promote economic development.
The AMCON boss says the corporation remains committed to its mandate of resolving non-performing loans and stabilizing the Nigerian financial system.
Global stocks were poised near record highs today, with the next move riding on results at chip-making market dull Nvidia, while sterling over near a 2.5-year high. The traders bet that Britain will lag the U.S. in quoting interest rates. MSCI's broadest index of Asian Pacific shares outside of Japan dipped 0.2%. Japan's Nikkei was flat. The S&P 500 went up about 0.2% overnight, and futures were steady in Asia, while Nasdaq 100 futures fell 0.1%. FTSE futures rose 0.2%. Consumer firms dragged Hong Kong, where Hang Seng slipped 1.1%, with weak results at Water Bottler, Norfolk Spring sending shares down 12%, and coming on the heels of downbeat remarks from discount online retailers, PDD Holdings. Cryptocurrencies extended declines as Asian futures pointed lower, triggering a wave of liquidation on the Bybit exchange. This move appears to be been kicked off by material drop by Ethereum, now which has been struggling all years versus Bitcoin. According to Going Glass, the future market has seen $93.5 million in long-term liquidations, which forces traders to sell their assets at market price to settle their debt across central exchanges. Head of private clients of Swan Bitcoin, Mr. Steve Lupkan, cryptocurrency markets are moved down sharply, triggering a level-driven liquidation. According to Coinsmetric, Bitcoin fell 6.4% to 58,777, while Ether tumbled more than 4.5% to $2,469.50. Bitcoin, the world's biggest and best-known cryptocurrency, is down 20.3% from $73,794. Crude oil prices stayed little change after sharp drop in previous sessions, ended a 3-day streak of gains amidst persistent concerns over potential supply losses from the Middle East and North Africa, as well as global fuel demand worries. U.S. West Texas Intermediate crude is selling at $74.64 with a downward price margin of 1.18%. Brent also experienced a decline of 1.11% to sell at $78.67. Bonnie Light is down 2.84% to sell at $78.62. And for the OPEC basket, dealers are offering $79.43 with an upsurge of 2.16%.